I think at this juncture, it's important for me to remind everybody, Mr. Lu here is not getting anything
Except the char siu.
Except a char siu rice from him, which is still a promise and not given yet. But I'm not, this is not a sponsored video. I think genuinely, this is a very good insurance education for everybody. And I think Haven, given its non-conflict philosophy, is, I think, a very good company that, I would like to recommend. Just like I selectively recommend some other companies, which I think is generally good for you, right? And I do not own a single share of Haven or in Provident as well. So now, let's now go down to the most confusing question to many people like us, right? Simi is the integrated shield plan. Okay, we roughly know some form of hospitalization plan, but there's so many complexity around it. What's critical illness? What's endowment? Right? So many things out there. Do we really need them? And if we don't need them, well, we cannot start with them. Yep.
So so for integration plan, the reason why it's quite integrated is because it's integrated to CPF MediShield plan.
Oh, that's the integrated part.
MediShield Life.
This government branding, product branding, and it's very bad.
No good.
Very bad. Just like all the CPF thing, I tell you many times already.
Quite good.
The terminology is bad. Okay. Now I know why it's integrated. This is actually the first time I know. Okay.
Oh, real. Okay. So every Singaporean or PR is compulsory to have MediShield Life plan. Basically, it's a hospital plan that covers for B2 and C ward, subsidized patient.
Government what only?
Government only.
Okay.
Government and subsidized.
Subsidized.
Go government A.
Government non-subsidized Bayside.
Yeah,
Okay.
B2 and below.
It's not that you can't. It's just that if you ever go to a B1 and above plan, B1 and above ward, and you only got MediShield Life, you will have to pay a lot of money from your own pocket.
I see.
So it's sized to be more suitable for B2 and C subsidized.
It's meant to be a 3-star hotel. It's meant to be cai peng, not meant to be a restaurant. Okay, understand.
So if you want to go restaurant, B1, A ward, private hospital, then you need to buy a private plan. Private IP plan, integration plan, for the coverage.
Sure.
So that's basically the hospitalization plan.
And I think there's some merit in buying, right? This one I think must buy.
Yeah, it depends on the healthcare expectation. I mean, in the event of hospitalization, which hospital, which ward we go to. Okay. If the idea is that I will go for private hospital, then you must get the private hospital plan.
Sure.
Because it's very expensive to pay from your own pocket.
I will say it before. A lot of people think the way I also think the way. In Singapore, can die, cannot fall sick.
I think one very important point is that if you want to have an option to decide which doctor you want to go to, then upgrading your plan becomes very important.
Excellent.
Right? Because otherwise you go to B2C, then whoever assign you get. Basically.
Yeah. So for subsidized ward, it's a team-based approach. Means any doctors will be assigned to you. Okay, you may see different doctors every day. Okay, to treat you. All right. So for integration plan, I think one of the biggest concern right now is the cost of the premiums. It's very expensive. Okay. In fact, this year, almost all the insurance companies except for one, I think, Raffles, all has increased the premiums. Okay. Whether the base plan or the riders plan. Okay. It's quite expensive. It's quite expensive.
What are we talking about right now? The fees.
Depending on each plan.
So, now there is this what called the lifetime premium chart. It means from the age of 1 all the way to the age of 100. If you add all the 100 years of premiums for the base plan, for the rider, the most expensive plan can cost up to almost $900,000. Imagine $900,000, almost $1 million.
That's up to 100 years old.
Yeah.
Okay.
That's a lot of money. So when a person is I'm referring to the private hospital one. So when a person is about 80, 90 years old, the yearly premium could be about $10,000 a year for the base plan, and then another $10,000 a year for the rider. So every year the person may have to pay about $20,000 a year just for the hospital. Yes,
it's expensive.
So you need to know how whether what kind of ward is important, because this is for private hospital. But if you go for a government hospital, the total lifetime premium range is lesser. I think it's about $300,000 to $400,000.
B2
A ward.
A ward also can.
Single bedder in a government hospital.
$300,000 there about.
Okay.
Yeah. So the private hospital is about 2.7 times more expensive than an A ward. So you really, because of all these increases, you really need to know what is your realistic healthcare expectation, because everyone want to go private. But you just have to know that actually as they go older, it's very expensive. You need to, if you want to go for it, you need to have enough resources set aside in your retirement assets, retirement funds to take care of the premiums.
Can we? It doesn't make sense. I was about to say, can we first part of my life, I take government first. No, sorry, I take private first. Then second part of my life, I take government.
You can downgrade.
You can downgrade.
Yeah.
Downgrade is always possible. Upgrade is tougher because you got health, right?
I see.
So you can always downgrade. Yeah, you
I
can.
see.
Yeah.
Okay. And do people do that?
In fact, people do that for the kids. Because kids, the premium is very low.
Very low when they're young.
So when for newborn, typically parents want to give the better ones, whether A ward or private hospital. Yeah, because it's quite affordable.
Sure.
And kids tend to fall sick in the first few years. Yeah.
Okay. And do you recommend people buy?
Yes.
Of course, right?
Yes, definitely. That's the first plan you must buy.
Which is the cheapest provider?
There's no cheaper.
I don't know.
Okay,
Very
very
difficult to
difficult
compare.
because every other years the premiums from different companies will change.
Okay, so this year, for example,
This year,
top three.
Raffles
Top three.
I think Raffles definitely cheapest because the benefits is smaller.
Okay.
I think Singlife is quite good also. HSBC is quite good also.
I see. Okay.
Yeah. But the one point that Eddie mentioned, which is very important, is that the insurance company from time to time may change their pricing. So this year you may have gotten what you think would be the cheapest,
Sure.
and you may end up 2-3 years later paying for the most expensive one.
I see.
So it's very difficult to try and find the cheapest. I think what is more important is probably to find a plan where the features is most suitable for you and what you're looking for.
And again, right? People like us who know, nothing about this, don't know who is better. The only thing I know is I go and call an insurance agent that I know. I say, I trust you, recommend me one, right? But he may be, again, have some conflict of interest somewhere there. They can come to Haven for this advice, right?
Definitely.
Yeah, definitely, right? Okay, very good. You know what to do. Don't waste time on this. Just call them, okay? Yeah. So I think that's something I'll be calling you soon for this. Yeah. Because I realized that while I can afford, a death and disability, I cannot. Sorry, I think I can afford death better than disability. I think I cannot afford hospitalization. It's damn xiong.
Yeah, and I think Eddie has said it. This is probably the most important plan that you must have. You got to weigh the total premiums you have to pay against your asset. I mean, 900,000 is a lot of money. I mean, if your retirement fund has only got 1 million and 900,000 is like 1:1, right? But at the same time, you got to balance it with the options you want. Because being someone who has gone through many of my family members having to be hospitalized, I know the peace of mind is very important. That option, that freedom to say, if anything happens, I know I have got all this plan ready. I have options to go to any hospital or any doctors that I want. That peace of mind is very important. But of course, it cannot be done at the expense of affordability.
Okay, very good. Okay, in short, go look for them, look for me. Okay, cannot afford to look for him because it's too expensive. This one is for mass market. Okay, but if you are rich, please look for him. Let's go to the next one. Critical illness. I know what it means, right? But then you overlap with whole life, overlap with ILP, overlap with term insurance, overlap with all these, right? Very confusing.
Critical illness basically covers the 37 critical illness definitions. Meaning, I cannot remember the 37, but the first few will be cancer, heart attack, pneumonia, stroke. So these are the common causes of
4 biggest causes of death in Singapore.
For claims in Singapore. So it can be structured as term, can structure as whole life. Okay, so it can. But the important thing is that for critical illness, it's important to have it when you are working, because when a person is down with critical illness, for example cancer, the person may not be able to work for a number of years, or maybe he wants to stop work for a number of years to spend on recuperation. So critical illness is actually very important to have. So then the next question will be for early critical illness, because over the years, early critical illness is a new product that people tend to sell. The idea is that, well, if a person suffer early stage critical illness, they can also claim. Okay, our view is that early critical illness is good to have, because our view of insurance is that insurance is useful to cover on things that are very catastrophic on the person.
But cancer very catastrophic.
Very catastrophic. But early stage, does it affect the ability to work?
No,
may not, because the person may still work as usual. You don't even notice that he is a cancer. He's going through cancer treatment because for early stage. All right, so it doesn't really affect the ability to work. So that's why we say that early stage critical is actually good to have. You've got extra money because it's expensive. Extra money, then go for it. But what is more important in the critical illness space is what we call a relapse cancer benefits. Okay, so this relapse cancer benefit is more a recent year thing, meaning that in the event of a critical illness claim, okay, most policies will just terminate, will just cease, right, because of the first claim, gone. But relapse benefit basically allows the person to have a second claim, a third claim. Okay, so this is very useful for working people, because after a first cancer episode, for example, the person go back to work, there's a relapse, and then chance of relapse is quite high. Okay, then there's no more insurance cover already. So this relapse benefit actually ensure a continuity of coverage for this person.
Wow.
Yeah.
And again, right, this critical illness, complicated thing, they can come and look for you. Right?
That can definitely. Yeah.
Please look for them. Okay, this one, yeah. Endowment.
Yeah.
Endowment
is a savings plan by the insurance company. So basically, you put in a lump sum or a
monthly amount,
a fixed amount per month, per year, right? Then at the end of a certain period of time, there could be a maturity payout, or it could be a income payout, like a retirement planner. Okay, you save for a number of years. Maybe at 60 years old, it pays income for a period of time, 20 years, 30 years, that kind of stuff.
So it's like forced saving.
It's a forced
regular forced saving.
Yes.
It's a saving plan.
It's a regular saving plan.
Yeah, it is as traditional as, endowment plan started before even I came into the industry, man. Because it's a very simple plan. Every month or every quarter or every year you save. At the end of 20 years, for example, there's a maturity value. You can take this money for your retirement. You can take this money, go and send your children for further education.
Yep.
It's a simple plan.
Does it come with a bit with some interest, some compounding?
Yeah. There's cash value.
Yeah.
You can even attach a rider, a critical illness rider, or that to it if you want.
Does endowment plan come with any the basic one? Does it come with any insurance?
Yes.
You can actually stack up insurance coverage on a savings plan, but I personally don't like it.
Why?
Because when you stack it up, the returns that you get from this endowment actually comes down. So if you want it to be a savings plan, you want it to be as low cost as possible.
Keep it pure lah.
Yeah, you don't stack it with critical illness, stack it with waiver, stack it with accident plan. Then the return at the end of the day is not significant. Right. So if you want all these plans, it's better to buy a separate term plan.
I see. Okay, so endowment plan by the most basic form doesn't come with insurance.
It has come with death cover.
It's death and total permanent disability.
I see. Okay, and does it return well?
It depends on insurance company. Now the projection is about 3 to almost 4% projections.
That's not bad, right?
Yeah.
Projection.
And it depends on how long it is. The longer it is, longer the endowment period, the better the returns are.
Eddie, when you say 3 to 4.25 is a life fund, right? You're not talking about effective return, right?
No.
Yeah. So what Eddie is talking about is effective return 3 to 4%. Yeah, but that's projection. So in reality, we don't know. It depends
so far,
on
historically?
I think 3% is, I would say, it's fair to say it's 3%.
That's quite decent.
I think it's not. For us, our view is that endowment plans are not toxic.
Yeah.
They are okay plans to have,
yeah.
Especially for people whom they don't like to take risks, or they have a very small amount that they want to save every month, $100 that they want to save. Endowment plan is okay as long as you can accept the fact that the returns won't be.
Can you terminate early?
You terminate lose money lah. You terminate too early, you lose money.
Oh, is it? What's the period that you don't lose money?
I don't know.
Usually, if you intention to pay over a short duration, then you should buy a plan that with a short duration.
Oh, they actually have this kind of. I see.
Yeah, if you buy a 25-year plan and 5 years later you terminate, you're probably going to lose money.
I see. Okay, it's for savings.
Savings.
It's just a CPF.
Yeah.
It's more like CPF.
Yeah, so it's not as good as CPF, but okay lah, decent lah for the risk lah. Yeah.
Okay, fair. Yeah, very interesting. Yeah. So looks like the whole range of insurance needs is far beyond, whole life and ILP that insurance specialists always push. But I think there's a whole lot. Okay, I think that it's very educational for you guys to share that with us. Last 2 questions right now, and maybe for three groups of people. Okay, let's say just started work. 20 to 30 years old, no kids, no children yet. What should they be looking at?
Firstly, I think hospital plans is definitely important. Get a good hospital plan. Number 2, get a disability income plan, because this person is working. He wants to protect his ability to earn an income.
Sure.
So disability. And thirdly, a critical illness plan.
To be attached to which one?
Just a separate one. Standalone.
Okay. Is it expensive? If we bundle like this, roughly?
Not expensive.
For people who are 20, 30 years old, should be quite cheap. They're so young.
Yeah. And if you're using term plans, I think, don't talk about integrated shield plan. Even include less than $2,000 a year.
All in, right? All these 3 all in.
I see. Yeah. Okay. And once I reach, maybe now I have a family right now, 30 to 40 plus. What do I look at now?
Then I think the next thing will be because they are dependents, death coverage is very important. To give the option of what you call it, if it's a breadwinner, okay,
income replacement,
and it's an option for the spouse to stop work.
I see.
To take care of children,
and also to pay whatever liabilities that you might want to pay off.
That's right.
Sure.
Right, car liability, things like that.
Housing loans, So death cover is very important. I think when you're 30 plus, then the NI form insurance will come in, which is the long-term care.
Long-term care.
Long-term care is very important because based on statistics, 1 out of 2 healthy 65 will suffer some form of long-term care in the lifetime. And based on the studies by Singlife, the average long-term care cost a person should provide is $2,952 per month. $2,952, about $3,000.
Wow.
So your CareShield Life only gives you about 600 plus
I see.
per month. So there's a gap.
I see. And of course, the last one is people near retire, like me, 50 plus, like him also, all the way to beyond. You know, what should we be looking at?
So when a person is retiring or near retiring, there are basically 3 plans that are most critical. Firstly, a subscription for life, Second is a long-term care. Okay, long-term care, as I mentioned. And thirdly is to have an income stream. So this income stream can be through the CPF life. You should actually try to maximize your CPF life.
I'm going to live to 100 years old for that. Then I can get back all my money and beyond. Okay.
Yeah. So for CPF life, our view is this, our Haven view is that you should at least have FRS. So FRS will give you about, for today's 55, will give about $1,600 a month.
Which is nothing.
Okay. So it's $600 a month. If you have FRS, $1,600. And next year, if you can actually increase it to 4 times BRS, that means 3,003 lah.
Almost 400,000. So almost
FRS is 426.
Yeah, 426. Yeah.
So equivalents to about 3,300
from
for
55.
55. This year 55 to 65. 303. So these are some things you can do. But however, for what our view is that when beyond FRS, not everybody is comfortable in beyond FRS. I mean, there are people who are very happy with the returns from CPF. That's fine. Because CPF Life has a few limitations. Firstly, it's quite rigid. It means your retirement age must be 65. If you want to retire early, cannot. You can't bring earlier. You can bring later, cannot bring earlier. So there's restriction. Secondly, is that
you cannot surrender.
Oh yes, liquidity.
Loss of liquidity.
Yeah. So if you want to, you can't surrender. Yes, we say you can't surrender CPF Life. Okay, because
once you start to pay out, right?
Yes.
You are stuck with it.
Yeah.
And let's say life circumstances change. For example, you are diagnosed to have a terminal illness. You're obviously not going to enjoy the remaining of the CPF Life payout, right?
Yeah.
At the same time, you cannot go to CPF board and say, can I take out some cash and spend my next 12 months touring the world? You can't, right? Because the payout has started, right?
So are there substitute for CPF Life outside?
Yeah, so that's I think what we are driving at. I mean, for some people who may not like this lack of liquidity, they might want to like top up their RA to FRS, and then the rest, instead of topping up to the ERS, they can buy a retirement income plan. Because the retirement income plan, of course, the return now cannot beat CPF Life because CPF Life is the best annuity in Singapore.
Sure.
But this retirement income plan will supplement that retirement income stream, and in the event they want to surrender, they can surrender. Yep. They will lose money, but at least they can get some cash out. And at that point in time, the taking out of some money may be important to some. Right? So it's a consideration. If that's important, then consider supplementing your CPF Life with a retirement income plan.
I see. Any last words, right? Reflecting of your own life experience with insurance, right? Your family, and whatsoever. You can share some of your personal experience, towards the whole concept of insurance.
I think for the longest time, we have always said that insurance is an expense. It is not a saving. Because if you want to save, there are many other options to consider for you to save and invest. There are other better options for you to save and invest. Insurance is really for protection only. Because insurance is for protection only, and because it's an expense, I think for the longest time, since the early 2000s, we have always said that buy as much as you need, but pay as little as you can. Don't be overly pressured into buying so much insurance that at the end of the day, you don't have enough to live a life today, and you don't have surplus to invest for the future.
Wow, that's a good one.
That's always been our philosophy.
Can you repeat the last statement again?
I mean, don't be pressured to buy so much insurance until you spend so much money on it and you don't have enough surpluses for you to live your life today and invest for tomorrow. I've actually seen it before.
Really?
People who have spent so much money on insurance, $20,000, $30,000 a year premium, that they don't have enough surplus now to live a decent life today and to invest it for the future. It doesn't make sense at all. That
you destroy your current life
and
don't even provide you a good life for future.
Insurance is your contingency plan.
Yep.
It is not your main plan, right? In the army, we say that this is a support plan. It's not your main maneuver plan. Your main maneuver plan is today and your retirement. You expect yourself to live because most people live, right? So you cannot put all your resources. It doesn't make sense to put all your resources into a contingency plan, leaving so little for your main plan. It just doesn't make sense.
Wonderful. Eddie, any last words on this?
I will share on the extreme. So Chris talked about the situation whereby the person wants to buy a law insurance, overbuying.
Sure.
My thoughts is that sometimes people tend to underestimate that they really need insurance. Statistically speaking, the chance of death, early death, critical illness may be low. But if it happens to that person, it is severe. So when it comes to insurance, it's always good to buy as early as possible. Buy as early as needed. In a way whereby it's not too expensive, they will affect your financial plans. Because I've seen a lot of cases whereby they really want to buy, but they couldn't because of poor health.
Well, gentlemen, this is a very big eye-opener for me. This one session, I learned more about insurance more than my whole life combined. So I hope that's the same for you guys as well. I think most importantly, we are very blessed that we now have a non-conflict insurance provider that will attend to the man in the streets, like you and me. And I would really urge everybody to go reach out to them and see whether they can help you on your wonderful insurance needs, right? So thank you, gentlemen, for this very important time.
Thank you.
And I really wish the success for Haven. And I'm very inspired by your call to serve the people and in a non-conflict way, right? So thank you for joining us.
Thank you. Your chassis rice is on the way.
Thank you. All right, thank you, everybody. Thank you.